Good morning and welcome everyone to Daily Rates Live with the Mortgage. I'm the president of the Mortgage Calculator. We are a lender and broker that's licensed in over 20 states with over 200 loan officers. We'd be happy to give you a full breakdown of some of the topics we go through today. But what we like to do every day is check out our live rates for our standard programs, and then we'll go into a deep dive on a specific topic. Today we'll be talking about our prime jumbo loans. So this is typically the best tool when our customer qualifies for conventional. The loan amount is out of reach for a little bit of a higher price property. So that's the specific example. I do have just one simple example, so we'll go through it very quickly, but I'll talk about in general what the different options are once we get into that program. So let me go ahead and switch screen and we'll check out some live rates for today. So first up, we always want to consider the markets in general. So the best thing to look at here in general is the 10-year Treasury. It's going to track rates overall, especially when we're talking about rates for different programs and loan type. Definitely good to track the market overall. You see a lot of up and down throughout the week, especially if we have different news. This morning it looks like a little bit up, but we always want to pull it out to larger sample size here to see that we're still pretty much at 1 year low. So definitely still a great opportunity. When you weed out the news, still a great time to be out there shopping in general. But let's check out what we have today for our actual live rates. So for our standard programs here, we set up a basic scenario that we can compare across all our different programs. And we use a standard single family home, 500,000 purchase, 300,000 loan amount. That corresponds to 60% loan to value, 760 FICO, and 40% debt to income ratio. That way we can compare across all the special programs we have. It's a little bit low for some of these initial programs, but that's what we'll talk about in our example. So for our conventional conforming options here, the most common option people think of when they think of a mortgage, rates today come in as low as 5.875. Final APR comes in at 6.135. So not much change since last week, really. FHA, definitely if our customer doesn't qualify for conventional or conforming, we want to check out FHA. Allows a little higher debt to income ratio and a little more leniency on credit issues, but does require upfront and yearly mortgage insurance. So that comes in at 5.25, but the final APR is 6.143. So always look at the APR so you can compare the full cost, because that includes all of the fees and mortgage insurance. And for eligible vets, active service members, and surviving spouses, VA is a great option. Rates today come in as low as 5.375, but much lower fees than FHA when you're comparing there. So finally, 5.639, definitely typically the best option for any of our eligible VA borrowers. And we have USDA options coming in today, 5.125 rate, final APR 5.826. And definitely our customers that are looking in those USDA eligible areas, typically the rural areas of the country, and they have income that qualifies, they'll typically be comparing to an FHA or a conventional option. And it looks like USDA is quite a bit cheaper today, which is a great option. And once we start going outside the box, this is similar to what we're going to be talking about today. But our favorite options here at the Mortgage Calculator is to provide our outside the box solutions. Up our non-QM alt doc options for a primary home. So for our borrowers that don't qualify, conventional, FHA, etc., typically our self-employed borrowers maybe need to use alternative docs such as bank statements, 1099s, P&L statements to prove their income. We can do that here, and rates are pretty similar to conventional, 5.875, final APR 6.145, so a little bit higher on the fees there to go with our non-QM options. And we can use our non-QM doc options for investment properties, rates as low as 6%, final APR comes in 6.21, and we compare that to our conventional options for an investment property, same rate, 6%, final APR 6.311, and we always cover our favorite loans here, or some of my favorite loans at least, at the Mortgage Calculator, our DSCR, debt service coverage ratio. No income or employment information needed. We simply use the estimated rents from the rental property to determine a DSCR ratio. And if the rents can cover the expenses, in this case, that's a ratio over 1, which is what we use for our examples. And our first example has a 3-year prepayment penalty, which is pretty standard. Rates today for DSCR come in at 5.999, a little better than conventional. And final APR with all the fees, 6.234. So definitely beating conventional a little bit, which is pretty amazing. And we can add a 5-year prepayment penalty to sweeten the deal. It does lower the rates a touch here today, which is great. 5.875 rate. Final APR comes in 6.193, which is again cheaper than conventional and alt doc when we add that prepayment penalty. And we have a ton of different options here. If you keep scrolling down, we have all kinds of different outside the box solutions for our investors and our borrowers out there that need a little help. But today we're going to be talking about prime jumbo loans. So typically a prime jumbo is going to be our best option if our customer, again, qualifies for a standard conventional loan. But the property is a higher price, or in this case, the loan amount is over the limit. So I have an example property here. We used this before, definitely just outside the limit. So a good example, just a standard small home here in the area. Very nice little home, but it is outside the limit when you need to get a purchase price of 1.175 million. We cannot, unfortunately, use a conventional loan to reach the standard 5% down amount that most people are requesting when they request a conventional option. So our first example here is when we do have to quote, unfortunately, a max conforming loan. And this year, for 2026, the max amount is going to be 832,750, roughly for 2026. And so what we set this loan up as is 30% down payment, 70% loan to value, because that gets us just a hair under the max loan amount here of 822,500. And still gets us some great rates because we are putting more down payment. So that's one of the benefits here. But unfortunately, to add a max conforming loan just under the max amount, we're going to have to put about 30% down. So many of our borrowers here obviously would love the rate, 5.75 lowest rate, 2.25 discount points and costs, and our rate in this example, 6.375. So obviously our customer typically love to offer to have this option, but with lower down payment is the typical request. So there's a couple tools that we can use to get there. That's our topic for today. And that's going to be, first off, let me show the scenario here. We had a 760 credit score in this example. And again, we set this up as our conforming primary home. So if we use these same settings, same FICO score, same everything, and to present our borrower with an option for lower down payment using traditional underwriting methods, the nice option here that we haven't gone over in a while is our prime jumbo. So the max LTV on the prime jumbo options are going to be 89.99, roughly 10% down payment, which is a little higher than the standard conventional, but other than that, it is almost identical. So they call it a prime jumbo because we're going to use the same great automated underwriting system that we use for our conventional loans, and it's going to make it a lot quicker and easier to qualify because it's going to be the same as a conventional loan. The only difference is the loan amount is going to be higher than what limit. So in this case, obviously the rates are higher. There is no PMI in this example because this is technically a non-QM loan still. So the rate here, 6.75, cost 2.375 discount points and costs. And the lowest cost option, 7.5 rate for 0.5 discount points and costs. The benefit here is we're able to put right at 10% down roughly, and we're able to exceed what would be the conforming limit and do an otherwise standard loan here at that 89.99 LTV. So this is the typical setup for our borrowers that are looking to just get past the loan amount issue. And again, we have a lot of tools to get our borrowers there as well with alternative docs. But in this case, this is a standard conventional loan. As far as underwriting goes, going to use our automated underwriting systems. And the only thing that's going to be not standard is the actual loan amount. So let me pull up my graphic here. Let me just go over a couple final points here too. So we can, I didn't pull up the examples, but we can do, I just wanted to point this out. We can even do a 2-unit primary home. The limit there is going to be 84.99 LTV for these typical programs. And we can do cash out up to 80 LTV for a 1-unit, 70 LTV for a 2-unit. So that's pretty cool. And we can use these programs for second homes and investment properties. Second homes, max LTV for these prime jumbo options, going to be 80% loan to value, and cash out for second home, 7% loan to value. And for investment properties, the max purchase, 80% loan to value, max cash out, 70% loan to value. So these are pretty cool options. Borrower is used to a standard conventional loan, and unfortunately is just not quite able to get there with the loan amount limitations, but otherwise is interested in what would be a standard loan. So if you have any questions on any of the programs we went over, or like a full itemized loan estimate with a full breakdown, please get with one of our team members. They'd be happy to help you out. And we'll see everybody later.